Hey everyone, and thanks for jumping back into the precious metalverse. Today, we're going to talk about gold, and we're going to be looking at the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel for Into the Precious Metalverse, which you can find a link to in the description below. Let's go ahead and jump in. So we don't talk a lot about gold and or silver or precious metals in general on this channel. And the reason is because a lot of times the risk adjusted returns on crypto are a bit better. I was very candid about that in 2019 and 2020 on this channel, saying, look guys, one day the market is going to look a little bit different, and then we're going to need to talk about other asset classes. And then in 2021, I said that, look, crypto looks good, but the risk adjusted returns are not as good as they were in 2019 and 2020. Therefore, we need to consider other things. We've talked about them a little bit, but I want to talk more about some of these precious metals and ways that you can hedge. Okay, so remember, in a risk-off environment, being heavy in cash and commodities does tend to do quite well, okay, in a risk-off environment. We've talked a lot more about this on the premium list over the last 3 months, building a cash position. If you don't like cash, there's always commodities, precious metals like gold and silver, etc. And by the way, I do have positions in them for full disclosure. But I wanted to talk about something here, maybe a concern as well, just so I'm communicating everything, and then hopefully you can make a decision on kind of what you think makes the most sense for you. So as we know, in a risk-off environment, gold does quite well, and we can go look and say what the S&P did in say the year 2000 when it was moving down, and then in 2008, what was gold doing during that same time, right? 2000 up until say 2011, gold was in a macro bull market. Now, what's interesting is if you pull up the 20-week SMA and the 21-week EMA as we do for Bitcoin for gold, it doesn't really look like it makes a lot of sense. Okay, and one of the reasons is because gold, precious metals move a lot slower than the cryptocurrency market does, right? Just like transporting them is a lot slower as well. But it just moves a lot slower than crypto. Therefore, I created the gold bull market support band, which is not very complicated. It's just the 20-month SMA and the 21-month EMA. And coincidentally, these do happen to hold up relatively well. Now, the last time I spoke about gold and silver on my channel was actually back in August of 2020. We had a portfolio optimization video. It's this one right here, precious metals, portfolio optimization, gold, silver. We looked at a couple others, maybe like palladium and something else, copper. I don't remember what it was. And then we also put this one out in July 2020. We talked about, we're getting into a multi-year bull market more than likely, and are they going to explode over the next 5 years? Now, what's interesting is since I made this video, nothing really happened in the gold market. And look at this. I made this video July of 2020. Gold was at 1854. In March of 2022, we're at 1996. So let's say from 1854 or so up to the current price, over the last year and a half, gold has put in a face melting 7.5%. Now, I say that sort of kidding, but also in a serious note, I will say I am not I've said this before, like I'm not a maximalist when it comes to any asset class, right? I just want to make sure that I'm managing my risk accordingly. I'm diversified accordingly. I think it's silly to be all in one asset class because we know what the downside risk is. I mean, I've had conversations with people about that on this channel before, and I do think that diversification is key for full openness. I do own some gold. I do own some silver. I also own a couple other precious metals as well. But I wanted to talk a little bit about where gold is. And we've previously talked about this logarithmic regression model. Maybe I'll talk about that in a future video. But in this one, I want to talk about the bull market support band for gold. And one of the things you notice is that when we're in a massive bull market, we tend to hold this bull market support band as support. Again, this is the 21-month EMA and the 20-month SMA. Okay, so we generally hold this as support. Even if we fall below it, as long as we had the weekly candle the following week get back above it, we were fine. But the minute you get a close below the bull market support band and then a confirmation that it's below it, that's the bear market. And that's what happens, right? What happened after that? You had a long accumulation phase. But remember, for gold, things last a lot longer than in crypto. So then you had a 3-year I mean, or maybe even longer. You had a bear market that lasted a while, and then you had an accumulation range that lasted for, 5 years or so, potentially from like 2014 or 2013 all the way out till 2019. And then ever since then, it's been in a bull market. But over the last year or so, it hasn't done a whole lot. Year and a half, it really hasn't done a whole lot. We went back down, held the bull market support band as support, and now we've bounced higher. Now, I like to learn from my mistakes as much as I can. One of the things that I need to remember is that Bitcoin also held its bull market support band over here, and then it only put in a double top basically, and then it came back down. So believe me, it is on the forefront of my mind that there is certainly a possibility that gold comes up here and puts in a double top at 2070 or something, and then comes back down. Okay, there is a possibility of that. So I will say that right now. I did not consider that possibility as much for Bitcoin. Not until we broke below the bull market support band did I consider it as a possibility. And then I've since then I've shifted my stance to being risk off right now. Like we are clear, Bitcoin is clearly in a bear market. The dollar's in an uptrend, gold's in an uptrend, U.S. oil's been in an uptrend. Clearly, we're in a risk off environment right now. So looking at gold, it could come up and put in a double top. However, with that said, I think it's more likely that gold is going to go on to put in new highs and trend higher. I think it's more likely. Doesn't mean it has to happen, but I do think it's more likely. And one of the reasons is because, we had such a long accumulation phase. We had that initial move higher, and then we had the typical retracement back to the bull market support band. We did the same thing for Bitcoin, but this was after a parabolic rally. I would argue that the current move for gold is less similar to this move because this was followed by a parabolic rally, but it's more similar to this move, right? Where it gets above the bull market support band and then goes up and then comes back down to hold it as support, and then it goes on a rally, right? So you go look at gold, it went above the bull market support band and now it came back down. It's holding it as support for a while at around $1,700, $1,800. Now it's approaching $2,000. Okay, so look, the bull market support band for gold, which again is the monthly moving averages, ranges from 1792 to 1830. As long as the price of gold is trending above that and holding those levels as support, which again are dynamic based on the price action, then gold is still looking relatively bullish. Now, I will say that I don't think anyone here who buys gold or buys silver, it's very likely not a get rich quick type of thing, right? It's not this is going to make you wealthy beyond your wildest dreams. What it is, though, is it's a way to preserve your wealth during a risk off environment. And it could still go up. I mean, gold could go to $3,000 or $4,000, or it could do that. And certainly I'm sure people would love that. But even if it goes up 2x or something, it's likely not going to be like life-changing money. And you might stick your nose up to 40 or 50%. But remember, if the alternative is watching your altcoin positions bleed 90% or 70% or something, then is it really that bad to have a hedge? Is it that bad to have cash in your account? Is it that bad to have some precious metals as a hedge in case the S&P continues to plummet, in case gold continues to soar, silver continues to soar, right? Is it not a good idea to have some as a hedge? I would argue that it is, but I understand some people feel differently. Okay. So I would like to just, remind people that I haven't really spoken about gold and silver since not a whole lot on the public channel since mid 2020, but it's also because they haven't really done anything since mid 2020. I mean, again, back over here, the price of gold was I believe it was 1854. Today, it's a little less than 2,000. It hasn't moved a whole lot. But when you sort of look at what gold has done in the past, you can see that these longer term bull markets could last for years, right? And when we made this video, it was meant for the next 5 years. So we said this back in 2020. It was an argument that over, say, the next 5 years, we could see gold go to, I think back then I said $5,000. I don't know if I believe that now, but hey, you never know, right? You never really know what can go on in these markets. So I think gold is certainly going to be an interesting one to watch here over the next few months. Clearly, it's above this all-time high right here. It is still below its prior local top. So clearly, we need to take out. Clearly, we need to take that out. Okay, and if we get rejected by it and then come back down, then I would say it would be some potential cause for concern, especially if you start to see weekly closes below. Then it could just be a double top, just like Bitcoin. But considering that, even if it does that, right? Even if gold does do something like that, it might be a 10% drop or so. I mean, Bitcoin can go down 10% in a day, right? If it were to do something like this, it would probably take months and months and months for something like that to play out. So just consider this as an alternative. And then also remember, one of the reasons why I'm not super heavily invested in gold is if you account for M2, if you account for say M2, then you'll know that gold hasn't really done that well in a very long period of time. Okay, and this is why I think it makes more sense over the macro scale to focus on risk on assets. But during bear markets in say crypto and in the S&P and the stock market in general, gold can outperform. We saw it do it during the year 2000 and in 2008. Gold was the one that was moving higher. The S&P was struggling. Okay, the gold has been moving down for a while against M2, or when accounting for M2. But if we are heading into a sustained risk-off environment for a while, then I would not be surprised if the gold valuation against M2 comes back up. Okay, so let's consider it as a possibility. Consider that it is okay to be diversified in your portfolio, to not just be 100% crypto or 100% stocks. I think a well-diversified portfolio is the way to go, where you have stocks, crypto, precious metals, commodities in general, real estate, bonds if you want them, cash equivalents, all this stuff. I think that's the way to go to manage your risk accordingly. And then you're sort of set up for whatever happens, right? So then if we quickly shift back to risk on, if the governments around the world decide to keep the money printers running, we could go back to risk on and we'll see those assets do well. But in the meantime, as long as we stay risk off, we have to consider that gold could provide some type of safe haven in the short term. Okay, so that's more or less what I want to talk about. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Remember, we do have that Into the Precious Metaverse Telegram channel, which you can find a link to in the description below. Thank you for tuning in, subscribe, and I'll see you next time. Bye.